All right, so I'm gonna quickly go over a trade that I took on EU. I took a partial loss, so we'll quickly go over the trade. So if you look on DXY, we're clearly in a daily market maker sell model. Making failed swing highs, displacing lower, retracing higher, making failed swing highs, making lower lows. So if you look at a 4 hour, initially I wanted to see price come up into this daily volume imbalance resting inside the 50% of the range, and then see if we can get a sell-off. But the minimum that minimum area which I wanted to see price trade up to was these highs here on the 4 hour into this imbalance. And as you can see, also this lower daily fair value gap. I wanted to see price take out the Friday highs. And if what you can see on Monday is that we swept the Friday highs, closed back inside the range. So on Tuesday, I was expecting price to come back, come and take out all of these lows here, Friday lows, because we closed back inside the range. So Friday lows, next strong liquidity, and then the previous week low here. On the 4 hours, well, we had the sweep, displacement candle, and we closed below these two down up close candles, forming a 4 hour bearish order block. So essentially, we engineered this high as well. So we had the Asia highs here inside the 4 hour order block, and we have this 1 hour BPR as the key level as well inside that 4 hour order block. So we have bearish daily structure, bearish daily key level, sweep into the key level, displacement, 1 hour key level forming now, 4 hours as well turned bearish. And we had this we had liquidity here as inducement. So all I wanted to see was price run up into this high, into the hourly key level, and then see if we can break down here. So same thing on EU here. We had the daily fair value gap here and this daily order block, tapped into it, into the discount of the range, and then we had this large wick away from it. So nice body closed back inside the previous day's range. And we had some displacement here with this candle here. On EU, we didn't confirm the 4 hour order block here, but because on DXY we did. It was enough for me to take a long here. So we had this 1 hour BPR as well on EU. We had this low here. So essentially I took a long here. With my validation at the Monday lows, and then I wanted to see price come up into the previous week's high. So yeah, essentially we displaced lower into the key level. We had this push higher, and we did not get that displacement away from the key level. So we came into this bearish order block, and then we sold off from it, forming a bearish proportion block, which is already the first bad sign here. But the thing is, price could come back into this low one more time and then continue higher. So came back into the low, and then you usually want to see an immediate reaction. So firstly, the first bad sign was that price closed below the low inside the middle of the key level. That's already a bad sign firstly. And then we started to consolidate here, and then price just pushed all the way for the lows here. So that was the first red flag for me here. And then on DXY, we started slowly grinding higher. This hourly closure was already bad enough, and then this one was where I cut my trade here on EU. So the AM candle, we pretty much closed above the key level on the hourly time frame. So this to me just looked like a sweep, displacement, and now we got this has an extra liquidity because we closed above the key level. and we still haven't tapped into that daily volume imbalance on the 50% of the range. So at 9 a.m, which was around here, I closed the trade pretty much for like a 0.3R loss, around somewhere around this candle. So closed it for around 0.3R, and then it just dropped all the way to SL with this larger wick eventually. So managed to save a full loss with that, you know, just using candle closures on the hourly time frame to see what is it more likely that price is gonna, you know, violate this key level and come back for the lows, or is it, you know, is it likely to continue higher? So yeah, and then the last reason as well which I cut the trade was because on GU we can see that we've taken out the Friday highs and the Monday highs, and we started to get this displacement lower. So 8 a.m candles around here, hourly candle closed below this Fair Value gap which was holding price here. So once I seen that, I already knew that price was likely going for all these lows again here that we've engineered in this consolidation. So once I seen that, it was just a no-brainer to cut EU here for the partial loss here, and EU was, you know, consolidating here while G was displacing lower. So DXY was bullish, G was bearish, EU was consolidating. So yeah, I was getting essentially saved by Euro GBP strength. So close the trade here for partial loss, and yeah, a good decision in hindsight. So pretty happy with that. So I think in my opinion I probably should have waited for some sort of lower time frame confirmation here, because as you can see, we already took out the buy side here already. So this is high resistance liquidity, so that's already a low probability filler. If this is low resistance liquidity, like we had a bunch of equal highs, then this probably would have been a more viable trade, but that was already bad enough. And secondly, we haven't confirmed for our bullish structure yet. You know, we're still making lower highs. You know, order flow is still bearish on the 4 hour, and we had this, you know, this sweep, this deviation. So it probably would have been safer to wait for, you know, lower time frame confirmation here. But yeah, can't complain anyway. I managed to save myself a loss, but a full loss. But yeah, just for future reference, I'd probably wait for like a lower time frame confirmation, and then say if price is confirming that low risk buy, then probably you can scale in on swings or tail soup, like hourly tail soup entries, swing trades, whatever you want to call it. Like as soon as price is confirmed, you know, the low risk buy here. So yeah, that's probably what I would say for myself. And now that I'm looking back on the trade, so I wanted to quickly go over this as well. When you have price in this situation, where you have conflicting biases, and this is more for myself as well. So essentially I can frame two scenarios here. So first scenario is we've taken out the sell side liquidity here, we've taken out this low as well. So we have this untapped daily fair value gap, and we have this weekly fair value gap as well here, small imbalance here. So what price could do here is, you know, we have this range high to this range low if you use this dealer range. So price could, you know, price could come all the way back up here, and then, you know, sell off like that, and, you know, that would still be bearish for DXY, you know, daily stop run, and then into a weekly fair value gap, and then sell off. So that's the first scenario, but which would mean that DXY would probably be short-term bullish towards this high. But to get that confirmation, you would want to see like a closure above this daily fair value gap to fully confirm it. but in this situation we can see that there's no bearishness here so far. So you can already like consider this being somewhat bullish here. You know, we have the sweep, we have 4 hour is remaining bullish structure forming, order block, displacement higher, something like this. So technically which trading at the premium and order block and the daily fair value gap, meaning price can still sell off here. So this is why I'd say this is a 50-50 scenario, because you know, closing above the money range high, sweep, 4 hours bullish, so price can likely come for these highs next, but we're trading in daily bearish key levels, so price can also just sell off here. So here you don't want to look for any swing type of entries because the bias is not clear. You want to only look for intraday confirmations. But yeah, in these type of situations, you just want to see how price reacts to the bullish key level. It'll probably be better if I go on EU and break this down. Same thing on EU. Check out the previous week high, display close back inside the range. Weekly weekly candles forming a 3-bar swing. We have this weekly fair value gap, but then at the same time we have this bullish order block, and we have this bullish order block here, and this daily bullish fair value gap which we haven't violated. So you know, price can, you know, see the previous day low and then start to come back higher for these highs again, or price could, you know, just, you know, slowly grind lower into these lows. So for the you want to have like a bullish scenario, and you want to have a bearish scenario in this situation. So bearish scenario in this situation would be, you want to see price come up into this 4 hour bearish order block, and then you want to see if you can get like a lower time frame confirmation here, and you know, just short somewhere around here in intraday invalidation around here, can get like a nice 2-hour trade. Or you want to wait for price to close above this order block forming a bullish breaker, and then you know, you just long here, something like this, close above, then wait for the retest, and then you long something like this, and then something like that. That's the shit, it's drawing's error, but yeah, you get my point. So you just want to for now, because we had this deviation of the range highs, meaning range lows is likely, you want to just, you don't want to fade the 4 hour order flow until it switches on you, essentially. So you want to remain bearish until proven otherwise, and then if we close above with displacement above this 4 hour order block forming a breaker, then you want to use that as the key level to look for longs back into these highs here. So yeah, essentially that's just how you play it when you have these 50-50 scenarios, like here, weekly deviation, 3-bar swing, weekly fair value gap, bullish order block, bullish break, bullish fair value gap, previous day low sweep. You know, we can, like, these are like these are two like valid biases, you know. So yeah, that's just how you play it. And then essentially, if we get like a close below the daily bearish fair value gap, then that's like a guaranteed very that makes it like a 90% chance that price will also go for these lows next. So yeah, that's just quick gems on what you do in these type of situations, and just the importance of, you know, having that lower time frame confirmation in these situations, how, you know, it can really, you know, save you in these situations when you have these conflicting biases. So yeah.